But yeah, thanks everyone for joining this webinar today. This is to kind of promote and roll out. It's been effective for a few weeks now, but the Financial Education Hotline, we've partnered with DMAR, so DMAR is offering this as a benefit to all the members of the Denver Metro Association of Realtors. And it's a financial education hotline. So we're joined by Randy Gross on the line here today, as well as myself, Kyle Charlelli, and then we also have Christy Mays from our office. So that's our team. And yeah, so we've got a pretty small group here today. So if you guys have any questions, feel free to unmute yourself and just ask them. I've got some material prepared to run through with you guys. But really, this is just to promote the hotline, and hopefully this will spawn some questions where you can call in or schedule time with Randy or myself to talk on a one-on-one individual basis about your own business and help you guys make informed decisions, because that's our charge. That's what we're all about here. So this will be getting sent out to DMAR and this hopefully get blasted to everybody. But if you guys wanted to just grab this presentation, I've got it linked right here on this QR code. It'll take you to the Google Drive, and you can download this slide deck if you'd like. So, and then yeah, like I said, we're here promoting the hotline. So we've got a web page which has all the scheduling links for Randy and myself, as well as the hours for the hotline. It's Monday through Thursday, but you call in, it's going to ring both Randy and I's phone. One of us should be able to pick up, but if we're not able to pick up, we've kind of given a guarantee to DMAR that you'll get a call back within 24 hours, and you can also just schedule time online if you'd prefer to do that as opposed to just dial the hotline. So, like I said, got an agenda for us here today. Our businesses are kind of similar, brokers and agents, essentially in our world and in your world, and everyone's kind of runs their own show from what I understand. So if you're got your own entity as a one-person shop, or if you have employees, we wanted to talk about setting up different entities and what the benefits of the different entities can be, and then our bread and butter in our office is really doing retirement plans. That's about half of our business, as we help small businesses, local businesses set up retirement plans for their business. And then the other half of our business that we do is help individuals and families manage risk, manage investments, do financial planning, distribution planning, all that kind of stuff on the personal level. So we really covered all, but wanted to talk about the retirement side today for today's topic, and then what gets you to a successful outcome. And I've got some resources to give you guys at the end as well. So always disclosure information in our world. So the compliance folks want to make sure I put that on the screen for you. So that's our disclosure that lets you know that Randy and I are both licensed as advisors and as brokers. We can wear both those hats, essentially. And if you do want the one-on-one advice, which that's what we're here promoting, please do call into the hotline, and we're happy to provide you with the one-on-one consultation. But that disclosure is basically saying not giving any one-on-one consultation in this group setting. Today's just kind of general education. But if anything strikes a chord with you guys today, please call in. That's what we're here to help you with. So, talking about different entity structures, sole proprietorship, LLC, S Corp. I did an in-person event at DMAR just a couple weeks ago, and there were a bunch of sole proprietors in the room, all good. But wanted to talk about if you wanted to do one of these other entities, essentially. So setting up an LLC can provide you a little bit more protection. It is still fully pass-through entity. The complexity is really not that large, in my opinion, but you still pay all the self-employment taxes. And then typically when folks' income reaches a certain level, it'll make sense to switch from an LLC to an S Corp. There's a little bit more complexity if you do that, and if you guys have a CPA, usually a CPA is going to charge for that additional tax return. So if you do go to the S Corp, the business gets its own tax return, which gets filed first, and then you on your personal side will also get your own personal tax return. Obviously, if you're just doing the LLC or the sole proprietorship, the business itself doesn't get a tax return. It's just your own personal tax return. But really the big thing with the S Corp is when your income becomes high enough, you can do a split of that income between what you pay yourself in a W-2 wage, i.e. what's subject to payroll taxes. And if you're the owner of the business, you're on both sides of the payroll tax. You pay the employee side and the employer side. When I'm saying payroll taxes, I'm talking Social Security and Medicare. Okay? And if you go with the S Corp, though, you get to divide your wages between the W-2 wage and basically an owner distribution or an owner draw, which is still subject to income tax, but you get to avoid the payroll tax, which is about 15% if you're on both sides. Okay? So wanted to just kind of model out what this could look like. I know everyone's income is likely different and probably fluctuates from year to year, as does ours. But for this demonstration, I just wanted to use a simple round number. So let's say you make $100,000 of income. And if you're an LLC, all $100,000 is going to be subject to the payroll tax, i.e. the Social Security and the Medicare. So in addition to the income tax, you're going to pay 15.3% basically in those payroll taxes. Okay. If you go to the S Corp, what the IRS would say, and what you'd want to consultate with your CPA on essentially, is your W-2 wage or your salary just needs to be something that's fair and reasonable. So in this situation, we've kind of deemed that as $60,000. So as opposed to paying yourself $100,000 of W-2 wage, you pay yourself $60,000. Okay, the $60,000 is subject to the payroll tax, but then you take $40,000 out as an owner distribution outside of payroll, just from the business into your personal account, essentially. So that $40,000 gets to avoid that. So in this case, you only pay $9,100 in payroll tax or a $6,000 savings. So you can imagine as your income could potentially get higher than that, even more tax savings. But in this situation, that's a $6,000 savings. That's a good win for everybody. And if your CPA is charging for that additional S Corp tax return, it's likely going to be a lot less than $6,000. So that's essentially how the payroll tax works. We'll pause if anyone's got any questions on that. Okay. So on a retirement plan, we just in our world, we realize that a lot of self-employed folks and business owners don't even have a retirement plan set up. Okay, so we believe we're retirement planners, so we believe everybody needs to save for retirement. So we wanted to walk you guys through what are the options. When you're a business owner, you can really structure these retirement plans to really make it sing for you. And if you're a one-person shop, it's pretty simple. If you have employees, we need to do a little bit of digging on the census data. What's your demographic, your employee demographic look like? And then we can really structure a plan to make it sing for you, so that you can really maximize the value of the plan for yourself, as well as also benefiting the employees. So a retirement account, it's a place to save, first and foremost. And then you can invest in these. You can also just keep it in cash if you want, but obviously, if you're at the long-term account, you don't want to keep it in cash. You're going to want to invest it to really build some wealth. There's tax benefits. We're going to run through how tax benefits in these retirement accounts work, and then you have the ability for employer contributions as well. So I saw someone got in on the chat. I'm gonna come to the questions at the end. if that works. If Randy or Chris, if you could monitor the chat, that'd be good. So when we talk about savings, just wanted to make it clear, whether you make a ton of money or just a little bit of money, it's critically important that everybody save for retirement. That's really the key, because if you spend everything that you're making right now and you don't have anything to spend in the future, then that's not going to be a successful outcome. You got to find that right balance between spending now and spending in the future. So no matter how much money you make, saving needs to be a keystone habit throughout your entire working career. And if you have kids, I try to get that value instilled in them early on. So we all want to be financially independent. We all want to, retire with dignity. At the end of the day, is what we're trying to help people do. And then everything just keeps going up. Inflation's been a buzzword the last couple of years. Healthcare costs keep going up, as does life expectancy. So the cost of medical care in retirement is also much larger and lasting longer as well. And then Social Security, we follow it pretty close. But how much do we want to really rely on the government for this? If Social Security has no changes at all, Social Security is going to run out of money in 2033. Okay, that's what the actuaries that work for the government are projecting right now. That's if nothing changes. Now, I don't believe they're going to let it go belly up, but the levers that they have are to raise taxes for all of us that are still paying into Social Security. Okay, they could make us wait longer to take Social Security. So right now, full retirement age is around 67. They could make that age higher. They can make you wait longer to get to full retirement age. Or they could reduce the benefit of those who are receiving Social Security, less benefit than what you'd be entitled to today, essentially. So if I had to guess, it's probably going to be a combination of all three to keep it afloat. But right now, the way it stands today, Social Security is only providing about 40% of what people need to live off of. So you got to make up the difference by saving on your own. So on a side note, there's a presidential election in 2032. So if we thought the last presidential election was interesting, this one coming up in 2032, mark my words, this Social Security will be a hot button topic during that election. So okay, so different methods for retirement plans, essentially, and all these would be available to you no matter what you are. A sole proprietorship, an LLC, or an S corp, you could do any of these, essentially. And Roth is also available. There's a common misconception that we hear that it's only Roth IRAs that are available. You can do Roth 401ks. And then simple IRAs, which we'll talk about here, also now can allow for Roth. So 401k, this is what we kind of hear the most common. The benefit of a 401k is it's got higher contribution limits, okay? And employers can get money into 401ks in many different ways. Sorry about that. But you can do up to 70,000 total if you really structure the plans. If that's your goal, is to get 70,000 into the plan. Simple IRA has lower contribution limits. You still get to have some company money that goes in, and the difference between a 401k and a simple, really, in the startup space, is a 401k plan is going to have some administration. So if you reach a certain level in the 401k, usually it's about 250,000 or above, there could be some administrative costs that you don't always incur with the simple. So just FYI, you can get more money into a 401k, but once that 401k reaches a certain threshold, there's going to be some administrative costs, and we can talk everyone through all that. 401ks and simple IRAs are company-sponsored retirement plans. If you're not sponsoring a retirement plan, like I said, you still got to save. IRAs still work, and that's just an individual account. So only stipulation to contribute to an IRA or a Roth IRA is that you have earned income. That's it. So if you have earned income, you can contribute to an IRA. The downside of that is it's much lower contribution limits than a simple or a 401k. And then a SEP, technically this is only employer money that goes into a SEP. So if you have employees, everyone kind of gets treated the same, but it's just the max that you can do is whatever your W-2 wage is, essentially. Multiply that by 25%, and that'd be what your max contribution could be, up to 70 grand. Now, I like to put HSAs on here. We don't sell. Like, you want to set up an HSA, you can't come to our office. You just got to go to the bank that does them. We can set you up with a retirement plan if you'd like. But I like to put HSAs on here because, in my opinion, they're really the gold standard of investment accounts. We're going to talk how the tax benefits of a traditional or a Roth retirement account work, but I say HSAs are the gold standard of accounts because they are never taxed. So the stipulation to put money into an HSA is that you have a high deductible insurance plan, medical insurance plan. So I don't know what you guys have in your own business, or if you have a spouse potentially that has a high deductible plan. But if you ever are in that realm where you do have a high deductible insurance plan, I would highly recommend throwing a few bucks into an HSA and just letting it ride for the long haul and deferring all those taxes. When it comes out, it's going to be income tax free. And like I said, we all know we're going to have those medical expenses late in life. It'd be nice to just have a nice little nest egg just dedicated to health expenses in retirement. So if you got access to one, I'd like to talk about that on this slide as well. So, okay, once you're in the account, like I said, you can be in cash. That's totally fine, and you can recognize the deduction, the tax deduction. So, but really, if you likely want to invest in these, and you can invest in kind of whatever you want, to be honest. We could help you just decide. But what I have on now, I'm not going to read this whole slide to you, but we'll just kind of talk about some rules of thumb here. So if you're far away from your goal or far away from retirement, you do want to be invested aggressively because you have time on your side. In these retirement accounts specifically, it's about length of time in the market. We're not, as opposed to timing the market, we're not day trading in these retirement accounts. We want to be invested over a long period of time. So if you're far away from that, we want to be invested aggressively and try to really maximize those returns. Knowing that markets go up and markets go down. So if markets go down, you know that sucks to look at your account balance and see that you've lost. But you hold true because you got time on your side to recuperate all those losses and then some. As you get closer to your goal or closer to retirement, you want to shift to a more conservative strategy because you do not have time on your side. If you're invested aggressively, like if you're 62 looking to retire at 64, 65, and you're aggressive and the market's crater, think of like 2008, that's problematic for you because you do not have time on your side to recuperate all that. So as you get closer, you want to minimize those waves by shifting to a more conservative strategy. So, and all these investment options are available in all the retirement accounts. You could have conservative all the way down to a money market or a cash equivalent, all the way up to the most aggressive. So the tax benefits, how these work, if we're saying traditional or pre-tax, we'll use the same $100,000 income kind of as our example. Say you're going to make $100,000 and put $10,000 into the retirement plan, i.e. the traditional 401k or the traditional simple IRA. Instead of being taxed off the full $100,000, you're now going to only be taxed off of $90,000. Okay, in that year. That $10,000 goes into the retirement plan. It's never been taxed. We get to invest it. We all hope it grows. All those gains that we hope take place are all tax deferred. So the whole time it's in the retirement account wrapper, in that account, you do not owe any taxes. Then when it comes time to retire and take the money out of the account, you're going to be taxed at your income bracket in retirement when the money comes out. That's how the traditional works. Roth is the opposite. You make the same 100,000, you put the same 10,000 into the retirement account, but you're going to be taxed off the full 100 grand. Okay, so that $10,000 in the 401k or in the simple IRA has already been taxed. You get to grow it tax deferred, same as before, and when you take the money out, you do not owe income tax on it because you already paid your tax way back when. Okay, so operationally, that's how it works. Now, typically, everyone's next question to us is, okay, well, what should I do? And that can really vary from person to person, to be honest. So if you do want to have a one-on-one conversation about what's going to make the most sense for you, just reach out to us on the hotline and we'll help guide you. But some kind of rules of thumb here are in our working careers, we're typically in a higher tax bracket than when we are in retirement. Most people's prime earning years, when they make the most amount of money in their career, are in their 50s usually. So if you're in your prime earning years making good money, you could be in a higher tax bracket. And then when you get to retirement, you still have income and you still have taxable income, but typically it's less. So you could be in a lower tax bracket. If that's the case, it makes sense to go the traditional or the pre-tax route, right? I'd rather avoid the tax when I'm in a higher tax bracket and pay the tax down the road at a lower tax bracket. So that's kind of there. But if you're in the opposite situation where you think you're going to be in a higher tax bracket in retirement, then Roth would be the way to go. So that also is a caveat that we know what Congress is going to do with tax rates. You, me, or nobody on this call sets the tax rates. That's Congress. We don't really know what's going to happen in the future. So some people will just go Roth just for the peace of mind, knowing that, hey, I paid my tax. And when I look at my retirement account balance, I know that that's all my money. And that's a good reason to go Roth too, if on the behavioral side. So all these companies that do 401k plans, if you think of the big ones, everyone's heard of like Empower, right? Especially here in Denver. But Fidelity, T. Rowe Price, all the companies that do 401ks, they have everyone's data. And so they put out studies on what gets people to the goal. They know how much money you have in retirement. They have a decent idea about how much money you make annually, and they know how much money you have when you get to retirement. So they've all put out these studies on this. And most people like to jump down to the individual fund performance, right? That's what the media constantly talks about. Who's winning, who's losing, right? That's the sexy thing to talk about. But the most important thing is, did you put any money in? Did you do the right thing your entire working career? And always save a portion of your income. That, by far, was the most important factor in getting to a successful retirement, is consistently saving over your entire career. Asset allocation, rebalancing, age-appropriate changes all came in above the individual fund performance. And then obviously performance does matter. I'm not saying it doesn't, but that came in number 5. And I would say, if we're doing just like a traditional mutual fund, don't get too tied up in the weeds, right? If I'm analyzing the T. Rowe Price large cap growth fund versus the Fidelity large cap growth fund, right? I hope we pick the one that performs the best. Who wouldn't want that? But if I'm being honest, everyone over a long enough time period, 15, 20 years, they're going to perform relatively similar. So don't get too tied up in the weeds and focus on what you can control, which is how much you're saving. Okay, so got a few resources to just kind of give away. So like I said, this presentation's available, the whole thing, but if you want to grab these, this will take you to our Google Drive. And we're pretty proud of this. We put this out every year with different vintages. So this is a snapshot of 2025, but there's over 100 different flowcharts and checklists here. So this is a flowchart about, can I contribute to a Roth IRA? What issues should I consider as a business owner or 1099 worker? That's a checklist. So like I said, there's over 100 different resources to check out. You can just go there. You can bulk download them. If you got any questions on it, we're here to help, but we do this every year. We think it's a great thing uh, to help educate everybody. Another resource that we have is just budget templates. So getting off the retirement pedestal here, if I were to just say people who, you know, keep a budget, it's really nice to do and use that in retirement planning, knowing what our goal needs to be and if we can replace that income. But if we zoom out from the retirement talk, people who just have a general idea of where their money's going day in and day out, those people are making better financial decisions than people who have no clue. So I'm not saying you got to maintain a budget every single day or every single week, but if you've never done one, we've got a good resource there. Super simple budgets all the way up through super detailed budgets on Excel and Google Sheets, where you can get a snapshot and get a feel for where your money's going. There's also different websites where you can link your credit card and bank account to, and it'll categorize everything for you. It does a pretty good first cut. I've checked a few of them out, and you can go in there and tweak as you need. But if you've never done a budget, feel free to check this out. If you're having trouble knowing how much you can save or looking for gaps, it's a good resource. This final one, we're probably the most proud. It's got the most traction recently, is estate planning. So a lot of the folks that we work with in the onset, I'll say, don't have their estate plan in order, their documents in order. And when I say documents, I'm talking about a will, a living will, or a trust, okay? And you can get all these done complimentary for free via that link. Now, we're not affiliated to Trust and Will. I like to say Trust and Will is kind of like the TurboTax of estate planning. So if you're of a certain level or means, or if your estate plan is complicated enough, you're still going to need to go see an attorney, a lawyer to draft those documents for you. But if you're not there yet, or if you don't have your documents in order, this can be a great way to bridge the gap. It really can. So I hope everyone checks this out. If you just go to the Trust and Will website, it's going to cost you about $500 or $600 if you were to just go to it on your own and get signed up. If you were to go to an attorney, it's usually a couple $1,000s. But this code right here is unique to our subscription. We just re-upped our subscription for another 12 months. And I think we're going to keep it going as long as it keeps building momentum. But it'll take you to the checkout screen. It'll show $0, and you get to click right through it. And you can get a will, a living will, and a trust, all done complimentary. So it takes about 2 to 3 hours. If you know all the questions, how you want to answer them. The living will can be the tough questions to answer, right? But so I would just kind of challenge everybody with these. And if you don't know these, or if the answer is no to any of them, then feel free to check that out. When was the last time your will was reviewed, or do you even have a will? Do you know who the guardians of your kids are going to be if you go down? Do you have a power of attorney? And is it durable? So if you're incapacitated, can financial decisions still be made on your behalf? Do your documents have HIPAA? Do you have a living will, right? The living will is the tough conversation to have with your loved ones. That's like, if I'm a vegetable on life support, do I want the plug pulled? Essentially, you can lay out those directives in the living will. Do you have a do not resuscitate order? Do you have special needs, dependents? And what's the plan for your digital assets? People are constantly forgetting about their digital assets. So think of, like, if you're holding crypto in a hot wallet or a cold wallet and you end up going down, how's someone going to access that crypto? But you could also just leave simple instructions like, how do I want my Facebook profile left if I pass? You can leave instructions like that for your loved ones as well. So hope everyone checks this out. And we've gotten multiple questions because this is our subscription allows for unlimited plans. So just to get it out there, we've had people ask, can I give this to my parents? Can I give this to my kids? Can I give this to my neighbor? Honestly, the answer is yes. We just want people to utilize this service. We think it's a great value add. So that's why we signed up for it, and we pay for this service. So feel free to use that. So just got some common questions that we've got on the hotline in the past. So I'm not going to read all of these, but like I said, you can download this presentation. But I'll just shoot you straight. All questions, if you have any questions at all, really nothing's off limits. If it's something that we can't help you with, we'll just be frank with you and tell you, hey, this is out of our realm. You're going to need to go to this type of professional to seek that guidance. But really, we're here to guide you in nothing's off limits. So if you got any questions at all, financial investments, estate planning, anything, we're here to help. Insurance, we do all that. So I'll put this up one more time. There's the phone number. If you were to call it right now, it's going to ring me and Randy. So we're both here. And that's the full team right there. And then we're just down in Littleton, Colorado, 1 block off of Main Street. If anybody ever wants to stop by, feel free. So we're right about time, but I know we got at least one question in the chat. If anyone wants to take themselves off of mute, feel free to go ahead and ask questions as well.
I do have a question. Thank you so much for, taking the time to, present this class. But I did want to ask, so these slides are going to be on that website that you had just showed the QR code to, right?
Yep, I'm going to email it to DMAR, but if you want to just grab this real quick,
Okay.
you can. And
Thank
you
you.
can download this exact deck right there.
Awesome. Yeah, this was great. I really appreciate your time.
Of course. Let me pull up the chat. What if you turn into an S corp, but the following year isn't as good? You don't have enough income to take advantage of the structure. So I believe you can do that. So the CPA can elect how to file. I don't think you want to be flip-flopping every single year, essentially. But if you're not as profitable, maybe you just pay all your income out as a W-2 wage. And really the only downside is you'd have that little bit of complexity in the additional tax filing that the S corp would require. So, but you could still pay you have the ability to still pay all your income out as a W-2 wage. You just have the flexibility to not do it as well. So, did it answer your question, Donna? Okay. Okay, good deal. Okay. Any other questions?
This was super helpful. Thank you.
Sure.
I think I might reach out to you to see if you can do some financial coaching for my boyfriend and I together.
Of course. Yep. We would definitely welcome that opportunity to talk with you. Look, our charge on this hotline, we're not promoting any product. We're not doing anything. If you have questions about product on how things work, obviously that we can answer that. But our charge is really just pure advice at the end of the day.
Okay.
Not promoting product. But like if you have questions, like what's a commission versus a fee-based account, and
Mm-hmm.
how do they work, and what's going to be the best fit for you, so you're not out there getting screwed. Like we can answer those questions on how certain things work. On the insurance side, pretty much everything's commission based, and if sometimes people are interested in annuities. If you were to talk to the older generation, some people kind of shy away from them because they think they have high fees, but they don't understand annuities are insurance products first. So you gotta understand, what are you trying to protect. So we can get nuanced into all the different kinds of products that are out there: advisory accounts, brokerage accounts, insurance accounts, and then full-on financial planning as well. So,
Perfect. Thank you.
of course. question, what do you think of the 5 Wishes workbook? I'm not sure what the 5 Wishes workbook is, to be honest. Is that is that like a Dave Ramsey thing or one of the financial commentators? See, Donna's typing. Any other questions? Okay. Last chance, Donna. I'm not sure what the 5 Wishes workbook is, but if you want to let me know, I can try to answer it. I'll pull up the website real quick here. Yeah, I've honestly never seen this website before. Um, okay, so this is kind of looks like it's kind of revolving around if someone were to have like a long-term care event, essentially. So yeah, we could get into that. We can do long-term care insurance if that's the goal, or if it's something like this. This seems to be a little bit more like someone who's going to walk you through. We also have contacts of people who do this. This is an organization that looks like they do that, but can really outline a long-term care planning. Not so much on this website looks more on the planning side as opposed to the insurance side. But if you were to have a long-term care event, when I say long-term care, that really means you really need help with like daily living type of stuff. Someone who can clean your house, feed you, bathe you, potentially. So that kind of stuff. Yeah, I mean, reach out if we want to have a conversation. We got contacts in this space, no doubt. Sure thing. Thanks for the question, Don. Appreciate it. So, okay. Well, last chance, and then we'll adjourn. Okay, we'll just finish up by saying thank you. Appreciate you guys dialing in very much. Hopefully, everyone got some benefit out of today, and we look forward to hearing from you on the hotline. So we'll talk to everyone soon. Thanks, everybody.
Thank you.